All right, more drama in the crypto world. Crypto firms Genesis and Gemini are being charged by the SEC for allegedly selling unregulated securities. Let's bring in Yahoo Finance crypto reporter David Hollerith, who has the details on this. Big Dave, take it away.
Yeah, so Brian, the SEC is filing a litigated action that's requesting a monetary civil penalty plus disgorgement of ill-gotten gains. And this lawsuit's coming as the latest problem for Gemini and Genesis. And it's due to a business partnership they had offered Gemini customers, which is called the Gemini Earn program. So like bankrupt crypto lenders that we know, Celsius Network, Voyager Digital, and BlockFi, Gemini had an Earn program that offered retail investors high yields on their crypto deposits, as much as 7% when times were good. Now, unlike these other lenders, Gemini didn't do the lending itself. Instead, it outsourced it to Genesis through a master loan agreement. And this is unique because Genesis typically only accepted institutional size customers. And it ran contrary to what the SEC has previously done through actions. And what we know publicly, it fined BlockFi for doing the same thing last year. And then it also, in September 2021, also prevented Coinbase from doing a similar offering. So Genesis's lending business, the company that did the lending for Gemini customers, took massive losses over the summer. It paused its lending business shortly after the FTX collapse and laid off about 30% of its staff last week. Now, otherwise, the company's remained silent and has been seeking more time to try and find a way to hopefully, I think what they're saying is to fund their way out of this. I've spoken to a number of Genesis creditors, some of them being Gemini customers. Gemini has one of the largest creditors committee for Genesis right now. And they've said that the company Genesis owes approximately over $3 billion to creditors. And, as to why Genesis hasn't yet filed for bankruptcy, the best answer I've gotten from creditors is that if creditors want to do it, so to force Genesis to do it, they would have to pay a certain amount of fees, and nobody has the money now. So this is all coming after Gemini's executives and DCG, parent company of Genesis, have been sort of warring over Twitter, sort of pointing the finger back and forth at whose problem this is now that Genesis's lending business is not allowing customers to withdraw funds.
And David, meanwhile, Crypto.com is the latest victim of job cuts. What do you have there for us?
Yeah, by headcount, the retail-focused exchange is one of the largest in the space, and its CEO, Chris Marszalek, announced the 20% layoff around 1 a.m. on Friday. And he cited major growth in 2022 and specifically noted the collapse of FTX as significantly damaging trust in the industry, which has led to the decision to make cuts. Now, following Friday's cuts, Crypto.com employed coming with the cuts, Crypto.com employs roughly an estimate by our tally, 3,600 to 4,500 employees. And last year, the company announced a series of layoffs in June and another series between July and October. And a spokesperson for Crypto.com has not confirmed the company's current size. Again, those were our estimates. But it's also worth noting that, we're just 2 weeks into 2023, and we've seen, up to 2,600 layoffs in the crypto sector by our count. And notably, Binance, the industry's largest employer, still hasn't announced any cuts since the crypto bear market started. And in fact, yesterday, Binance's CEO CZ announced that the company was thinking of increasing its headcount by as much as 30% this year.
All right. Yahoo Finance's own David Hollerith tracking all things crypto for us. David, appreciate it this morning. Thanks.